Welcome to the big show. It's 1 p.m. Eastern in the Eastern Hemisphere, Western Hemisphere. We're here. What hemisphere are we in? It doesn't matter. Today is the day that the world is falling. Welcome to the Falling World Stock Show. What am I saying? I didn't have drinks at lunch. Nate did. It's Nate's birthday. Nate the Great, our dear intern.
Nate is 21
today. And we lit him up with a couple drinks at a lunch, and we have the beer here. Now, I can't chug this, Nate, but it's for those of you watching this. Nate, are you on the show? There, here you go, man. To you, my friend, 21, and all you're getting there he is. This is my homie, and there you go. Cheers, my friend, to his third beer in the last hour. Mom and Dad are coming to pick him up. God forbid. That's right. Mom and Dad are coming later. So
Nate had a margarita. If you check my Instagram at Paul Gabriel, Gabrail, please follow me. If you check it, I have stories of Nate taking. He has a sombrero on. He has a really weird face while drinking his margarita, and it's pretty weird.
I'm certain that wasn't the best margarita ever made, but all right, we're welcome in everyone. Yes, stocks are down, and boy, we smile ear to ear on these red days.
Well, wait a second.
Can we clarify what?
Please do,
what
Mo.
Stocks are down. Everyone's like, oh my God, stocks are falling apart. The stock market's not even down 1%.
Well, it just.
But I will say this though.
Go ahead.
I do want to make note of this one. Thank you.
Sick.
Sick.
The build-up, Paul. Look at that. You're always a showman. Here we go.
S&P is down 0.93. NASDAQ is down 2%. Tesla just reported amazing numbers, beat all estimates. They're down 3%, 4%. It's like, all right, gets the hype. And eventually, so what's going to happen is tomorrow everybody's going to be like, buying opportunity, go buy it.
Buy the dip?
Buy the dip. Now, I do want to make an announcement.
Please do.
I bought Alibaba stock today.
Check, please.
This morning, I bought Alibaba stock, sold some puts on it as well at much lower prices, $150 and $100 a share. I love what's going on with it. And I've decided to emulate some people I respect who believe the numbers in Alibaba. That was always my concern about Alibaba and any Chinese stock is, do you believe the numbers? And 3 people that I respect believe the numbers. So I remember, I always say, don't follow people just because of their ideas. However, in this situation, I came up with my own value and said, if the numbers are true here, then this is worth it all day. The people I respect believe the numbers are true. I'm comfortable with that as them doing my due diligence, that part.
Let me follow that up with, Sven Carlin, a wonderful value investor on YouTube, has done a few videos on Baba recently. He has been in love with this. Manish Pabrai has been in love with Baba for a very long time. Jimmy from Learn to Invest has been loving it. I follow all these guys, watch their videos, and I'm with you, Paul. If some of my friends, some of the folks I really look up to are in love with this, I can be too. And of course, when Uncle Paul and Mo started changing their thoughts on this company, and I'm definitely getting texts this morning about Baba, and it looks like everyone is in love with this. We have a video coming out later this week on our full take on Alibaba. But yes, it's a very intriguing company, Paul, and and keep going, Paul.
Can we talk about Tesla here? I mean, guys, let's talk about hype and talk about why you guys are with us right now. Tesla crushed numbers yesterday.
Yes.
Crushed them. They made over $1 billion in profit in the quarter. They did 11.96 billion in revenue versus 11.2 that were estimated. Of that 11 point whatever, 10.2 came from cars. It's a car company. Mm-hmm. And their profit was $1 billion, and they delivered more cars than expected. They're expected to deliver 900,000 cars this year, and the stock is down. This is my point. How can the stock be down if it's all about hype and the numbers are crushing?
How can it? Tell us.
Just hype. Eventually, people stop caring. What was that?
People keep saying that somebody on another channel, he's all worried about his options and stuff. What does it matter now? If that company's going to be doing $6 trillion, who cares?
Yeah, you shouldn't care.
Like right now, you should be saying, oh, maybe I should add a little more right now. Who cares?
It's just, guys, when the hype stops, eventually we did 2 videos today, one on Intel and one on, what was the other company that's been around for a long time?
Before you get to that, hi, Paul.
Verizon?
Yeah, we did Intel. We're going to have videos this week talking about Intel on updated on Crocs, which is hilarious. We did Verizon, Southwest, and a Tesla.
So Intel and Verizon are both below their peak price in 2000. They're still below those peak prices, even though revenue's up 2 and 3 times for each of those companies. So wait a second. If I told you in 2000 the stock Intel was at $75 and said in the next 20 years revenue is going to go up over double, would you have thought the stock was going to be selling at $52 a share? You said there's no way. That's the point. When things are overvalued, eventually they fall from grace, even when the fundamentals get better. Because even if you overpay, fundamentals can get better and the stock can still fall. It happens all the effing time.
A lot of people are chanting, Paul, let's look at Tesla versus Baba. This would be incredible because I think this is a tale of 2 tapes. You know, what something might be undervalued versus incredibly overly. This is very new for some people, Paul and Mo. You must know this. I mean, if you're watching and you're incredibly new to stocks, I was you. I would fire up YouTube, see all the popular stocks. I would buy them. I was heavily invested, all of my money in Tesla and Amazon and Bitcoin because my due diligence was watching stupid YouTubers. It's hard to find a show like ours, a naysayer, hater show like ours that loves buying stocks that are undervalued. But that is the case now for Baba, Paul. And would you consider
I do believe it. I think it's going to go. I have options, put options at lower prices. Great question was brought up here by Threesh, who I believe his father is an oncologist in Buffalo.
Oh, really?
I thought you tend to avoid crowds. It seems like everyone I've heard from has been eyeing Baba for the past week. I'm a bit too nervous for shares, but may buy some calls soon. It's a valid point, but I think you're hanging around this crowd maybe, and this is the crowd that gets excited about things that are falling and not the normal crowd.
Yeah, I don't think that those on like CNBC and Fox Business are necessarily saying that Alibaba is the greatest buy in the world right now.
And maybe they are, but that tells me there's going to be more downside to Baba. And I think your charts say the same thing, Mo, don't they?
Yeah, I mean, if you look at the long-term chart on Baba, let's zoom out completely. I mean, it's holding a resistance point right now, 180, but it can go to 165 and then 150. So this thing has room to fall still if buying volume doesn't come back in. But personally, I think there's an overreaction right now.
Mark is asking about, Paul, you are buying long-term calls. No, I'm sorry, you're buying puts on this, right?
I'm selling puts, and I sell calls. Can I do it to generate income? I'm not trying to make a trade. I use options to generate income to either sell stocks that I have at prices I want to sell them at, or buy stocks that I don't have, or buy more of a stock that I have at prices that I like even further. So as an example, I sold a January 2022 put on Alibaba at $100 a share. That wasn't paying very well. I think it was like 4.4% return, but it's the stock almost 50% lower than it is today. So if I like Alibaba at 181, I should love it at 100, unless some scandal comes out in the next few months. We find out, oh shoot, the numbers were not accurate. So
what's the return you got on that 100?
I think it's like 4.4%. It wasn't great.
Oh, that's not great. That seems pretty good just to sit around and wait.
Well, that's the reason I did it. If I was 100% invested and had no cash, it'd be okay. But I have a lot of cash laying around making me nothing. So 4.4% seems not bad.
All right, folks. As always, we're taking stock donations. If you want to see an individual stock, our charity today is Innocence Project. Up on my screen, Nate. I love you. Paul is a huge fan of Paul. Describe why you're in love with this charity.
Well, I just think it's awful if somebody go to jail for something they didn't do. Innocence Project is specifically geared towards violent crime, and there's some other caveat in it. But either way, I've had conversations with them. They're great people. I think one of the worst things in the world is sending somebody to jail, or it's worse yet, sending somebody to death for something they didn't do. And this is a charity that works its tail off and pays its lawyers very well in order to get people out of jail. And they've done a pretty good job of it. It was actually ironically started by the guy who got one of the guys who got O.J. Simpson off of his murder, even though O.J. did commit that murder. So, am I going to get tagged on YouTube for making a false claim?
Allegedly, Paul.
No, not allegedly. Actually, according to the government, he did not do it. So
that's right.
So either way, innocenceproject.org, $50 donation. We're going to have to check. Tim, if you could help us, or even what's your name again? John, if you could help us convert all the currency.
I forgot. Yes, one of our dear patrons.
It seems like somebody's been putting a little fast one on us.
One of our dear patrons, John Thiesing. John, I still don't know how to say his last name. John Thiesing, a friend of ours who filmed the Tesla promo. John Thiesing is in studio with us right now, and he's commenting, and he's sitting in as a guest today. So happy to have. Say it again, John.
Were they 4.8?
4.8% on the Baba puts.
Oh, were they really?
Go ahead, Mosif.
Yeah, but I bought them at a higher price. Mine were 4.4 because I think that since then the price has gone higher. Because the stock has gone low. What are you saying? What was that?
No, that makes sense. You got them at 4.4, $100, right?
Yeah.
So they're up to 4.8 now.
Not bad. So,
Brian?
so right now, my option, I'm actually in the negative of my option. But I don't care.
Brian, somebody in the comments just said that Kathy Wood started selling her Alibaba, which is just giving me a little bit more.
This woman
This is giving me a little more confidence here.
literally.
Let's confirm that. Let's confirm.
I said, are you being serious? And he said, that's what I read. So I'm going strictly
Good call,
off of what
Seth.
Brian said.
Good call, Seth. Kathy Wood.
Let's see here. What is Kathy doing now?
This is strictly what Brian said.
Okay, I'm not seeing.
June, she buys another.
Yeah, I don't know. Let's see.
1 month
Another
ago.
person said she's dumping all of her Chinese stocks.
No, she might be
Well,
on the news right now.
doesn't seem to be that way.
She might be on the
All right,
news.
well, I
Fake
don't know where
news.
they got this fake news from, but
Okay, let's not. Okay.
yeah, she sold all of her 10 cent in Alibaba. A lot of people are saying that. So
Wow. Okay, Robert's saying it too. Okay.
And
Wow.
Kay.
Yep. She buys high and sells low. Zachary. That's a good. That's the old saying my grandpa told me.
Love it.
Okay.
I love
Yes. Oh, and Paul, I think we should probably do a video on Baidu very soon. I was telling Tim at lunch we have not addressed this company in a while.
What is this again?
Baidu is
They're
another
Chinese.
Chinese company, along with Tencent.
Oh, okay.
These are some of the biggest companies in the world already.
Yeah.
And to be so large and, in your opinion, undervalued at the moment, it's an interesting story that we've been waiting for many years, Paul.
Yeah, but we still have a long way to go.
Of course.
I mean, I literally believe the S&P will be selling sub 2,000 at some point. So who knows?
Well, okay, folks.
Do we have any requests for stocks?
We don't have any requests.
Oh, that's great.
We don't have any requests.
Let's keep talking then. I will talk about, I still want to beat this. Let's see, crypto has been big. Crypto's up to $37,000.
Yeah, I love that they went up to 40,000 yesterday, and then Amazon came out today and we didn't say they put out a job listing for saying somebody in crypto, but then a spokesman came out today and said we did not say that we're going to accept cryptocurrency.
Oh, that's not what I heard. Yeah,
this
they
was
were saying
all rumor based on a job listing that they put out.
So if you have to jump on this kind of hype in order to justify
Yes.
your investment, is that really a safe thing to be in? I don't know.
Yeah.
I don't know. Either way, so guys, I still want to focus on Tesla because I don't know if many people understand how much Tesla crushed their numbers by. I mean, it was an incredible beat. They did a great job. I thought for sure the stock would be up, and then yesterday I'm like, remember I texted the group, I'm like, how is Tesla only up 1% after market?
Yeah.
And then this morning it started to fall, and now it's down 4%. I mean, guys, this is crazy. 4% on a $600 billion company. That's $24 billion wiped out because they crushed their numbers. Remember, guys, if you believe in hype, and they crush numbers, it should justify your entire hype, right? Easily. This company sold at $908 a share at one point. Now it's at $631 after crushing numbers before they were when they were at $900 a share, they weren't doing these kind of numbers. Now all of a sudden they are, and they're worth less, and they're going down further. Doesn't make any sense to me, but this is the true thing having to do with hype stocks, right? Yep. That's what happens with hype.
Go back to Alibaba and talk about the SEC monitoring, Paul, that really pushed it over for you.
So SEC announced, I believe in March or April this year, that for any Chinese company listed in the U.S. and U.S. exchanges, they're going to start requiring them to have U.S. auditors as well as adhere to SEC rules. That made me feel better about what's going on. Now, granted, this is the same SEC who didn't catch Bernie Madoff 4 times when they audited him. But either way, does not matter. It's still nice to see that kind of stuff happening. Again, the issue with China is still the question of the numbers, but it could very well be an overreaction. And I could be the reason, I could be part of that overreaction. And I decided to pull the trigger on Baba because of people I respected trusting the numbers.
Yeah, today this whole thing, it just fell so fast. I mean, I'm not looking at the chart for this one, but look how quickly, dating back to October, it was at $320 a share or something. And then if you look just in the last 5 sessions, look at this drop. I mean, this is all news driven. So I have to think that the news is, the narrative is going to change. Behind that, the company is solid. So it's not only just the news, it's that the company is also solid.
And if I told you in October, after seeing this chart, ignore all this. What the fudge? Why is my marker not working? There we go. If I told you all that, if I said to you, hey, the stock should be at 180 and it was at 311, you'd be like, That's not going to happen,
I'm sure those comments are there, Paul. Yeah.
While having markets go to all-time highs.
Correct.
You would not tell. You would have never said to Paul that
exactly.
That would
We're hitting all-time highs
Yeah.
yesterday, and the stock is down to 181.
Exactly.
Come on. All right, so we're going to do a stock right now.
Yeah, well, what I'd like to do, folks, there has been a lot of buzz around Corsair.
Gaming.
And I can't ignore it now, Paul. We've gotten too many questions in our Patreon. Of course, guys, make sure you are fondling that thumbs up. And patrons, we know we love you. We're going to look at Corsair right now.
I don't think we have enough data on Corsair, but we're still going to look at
Isn't it pretty new?
Yeah, it's a pretty new
Yeah,
company.
they went public on September 25th of 2020.
Corsair is in the business of providing high-performance gear for gamers and content creators.
So it's kind of like Turtle Beach in the sense of they make
mice, headsets, power supplies, gaming computers.
gaming chairs.
We've talked about this in the past. Obviously, gaming is huge.
They make mouse pads?
You see, Paul, that's how they're going to corner the market. Let's look at Corsair.
Mouse pads are back.
The ticker symbol is CRSR, Corsair Gaming. Paul, let's get after this a bit.
Now, remember, we like to look at companies with a longer history than Corsair has. They just went public. So what we can do, though, is we will look at the end of this, we'll look at the stock analyzer tool, make some assumptions, and then determine what we'd pay for the company going forward.
This is not a sexy pick, folks, in terms of, I know we want to follow the hype of Robinhood IPOs, Coinbase IPOs, and get on this hype train. But for value investors, and if you read more about some of the most famous guys out there, they let these companies mature into a company and then decide to buy it. So we usually stay off some of these newer companies, but we can certainly analyze our thoughts on this moving forward, Paul. So let's get after Corsair. What is the market cap using that beautiful Everything Money software behind you?
Market cap is $2.6 billion. PE of 17.86. I don't know why it's showing no profit margin because it should have a profit margin. Net income of 148, which is about, what is that, 7%? No, 6%, roughly. Oh no, revenue here is 192. It's still about 8%, whatever it is. The bottom line is it's an X. So a check in an X, no dividend. Free cash flow last year of $181 million. High return on assets, not enough data to show me a 5-year return, but that's where it is right now. Now, something that Mo talks about, a power stock. This stock is all below all of its moving day averages right here. Yep. This means there's a lot of negative momentum in the company. Granted, 300-day, 200-day probably don't exist because of the time it's been around.
They just got to the 200-day.
Okay, so we're looking at these ones. It's still below there. So let's proceed on.
Paul, when you're, say for example, I don't want to jump the gun too much, but say if you're in love with a company and then Mo's charts, like Alibaba, say that this thing could fall even more, would you wait or just dollar cost average in?
So as a value play, I would just dollar. If most charts tell me there's a downward trend,
yes,
I might not buy as much as I would had he said, hey, there's an uptrend. I might just wait and sell puts on it.
Yeah, I think that charts can help with entry points. Are they the end all be all? Of course not. But I think they can help with the
managing how you enter the stock.
Exactly. Yeah. And then that goes back to I was deciding how much to buy today, how many shares to actually buy. And that did help me because I was like, well, I could probably dollar cost into this thing a little bit, depending on where it goes, and then coupled with the put. So go, yeah.
Let's get back to Corsair. Yeah. Head over to the income statement. We want to look at the income over the last couple of years, Paul.
So let me see if we're getting a data feed. Here, yeah, same thing. So I'm going to go to. See, the thing is, if you look here, the data feed isn't the best. They're skipping quarters even on Y chart. So it's not just, it's the data from Morningstar. So our data here is the same. It's hard to get this data because it's a new company. So I want to compare quarters to quarter. So December 2020, they did 556. December of 19, they did 326. So there's clearly growth in the company. Clearly there's growth. They did 1.7 billion or so last year, 1.9 billion, whatever the number is. Net income, here's something unique. Profit every quarter. Every single quarter is profit and growing. So the question to ask yourself as an investor is, what's going on with the future of gaming things? You know what I mean? Are people going to be really doing a lot more money on their gaming situation? I don't know. I just saw the other day this thing called Backbone or something like that. You attach it to your phone and it gives you an Xbox, which looks pretty cool to me. Obviously, in the gaming world, gamers are different. They want their whole setup. They want it to look cool. I'm sure if you Google it, esports is becoming a
huge. I mean,
huge. I think
stadiums
Kentucky
filled
has an esports team or something like that.
Yeah,
University of Kentucky.
I think people like our generation who grew up on video games are obviously having kids, and I have a totally different thought process about video games. I played a ton of them when I was a kid, Paul. I got all A's, played sports, I went outside, but I think it's more accepted nowadays that you can play video games and that's perfectly fine. You're not a nerd or you're not.
Yeah, they're like building an arena for it in Texas.
It's crazy.
Did you see this arena?
It's amazing. Yeah. Okay, Paul, let's keep going. What about profit over the last?
So one of our fans here is saying one of his brother's friends makes multiple six figures.
Come on,
playing video games.
Wow.
I mean, it's a career.
Profit growth.
Shares outstanding.
We
it's pretty
skipped
much
profit, Paul. We skipped profit, my friend.
I did profit.
Sorry about that. Keep going. I'm losing it.
Shares outstanding. It's an X, but it's pretty much the same from a few years ago. So it's up slightly by 0.1 million, 100,000 shares. This is the hard part about doing new companies. But balance sheet, 711 million versus 499. Check mark there.
Free cash?
Cash flow statement. Let's go by 4 quarters at a time. 181 million in the last year. So 181, not enough data as you can tell here. 181 million times 20 equals 3.6 billion.
Yeah, the market cap is 2.6.
So it's a check. Now here's what I'll say, guys. I would never make a decision just based on the data I see here because there's not enough data going backwards, and I don't know the future of gaming. This is where the next research comes in. When people say to me, Paul, what do I do after the 8 pillars? Go do more research. It's not like Microsoft that has just or Apple that has just such a stable of people sitting there doing everything month in, month out. This is a new company that's gone public. It's in a very niche field. We've analyzed Turtle Beach before,
yes,
which is kind of the same area. So please make sure you find out what you think the future of this company can do.
Mo, are people trading this company, Corsair, in the bid and ask nation?
Yeah, there's a lot of people doing that. Now, the big thing, I mean, you could just see this consolidation that it's had. Why is this not working? Okay, that consolidation that it's had over the last, couple of months. But let's go look at the daily chart. This is way more important. So they just hit, like Paul was saying, they just hit their 200-day moving average here. This is where they became a 200-day-old stock. And right now, they're under all 4 of those major moving averages. So the trend is for sure down. They've been down since June, and they've just been coasting on the bottom. This is one of those where I think you just keep it on your watch list and let it turn up and let it get some volume, let it go through these moving averages, and eventually this thing may be something. But right now, I just don't think that you should be playing with this. No, the volume's fine on it. But just take it easy on this thing.
Paul, let's get back to the stock analyzer tool. You can get it being one of our patrons. This is in everythingmoney.com. Go ahead, Paul.
So this stock analyzer tool we use to analyze our companies going forward. I did a 5-year analysis. Now, the reason this is good for this company is if you've done your research, you can make assumptions based on growth rates and profit margin. You can get an idea of what the company needs to do in order to justify a certain price. So I made low assumptions and high assumptions of revenue growth, 5 and 10%. I assumed issuing shares, taking shares away, profit margin, 6 to 10%, free cash flow margin, same thing, PE, 12 to 18. Hit my returns, hit my analyze button. Guys, it's actually maybe not terrible. If you think my middle assumptions are reasonable, it's probably a buy right now. It's currently at 29 bucks and it's selling for 30. It's currently $29 and the middle assumption says $30 a share. Now, would you take this as this is gold, go do it? No. This is part of the process of learning. Do you think they're going to grow at 10% a year for the next 5 years?
I know this is short term, Paul, but this stock was $46 in February, and it still seems like they're making money on a quarterly basis. What happened? Where has the hype?
Listen, momentum shifts. People got to remember the momentum will. Here's what you're going to see. Every company has good and bad attributes to it. It depends on what the momentum is doing, and that's the reports you see. That's the news you see out there. So if things start to go south, you're going to see all the things. Keep note of this. All the hype companies right now, when they finally do go down, the news that they're saying about those companies, I bet you if you Google and research that news, it's been going on for years. It just became what was relevant right then and there to justify the downward trend. Because look at Tesla. Tesla just crushed earnings, but it's down from 900 to 630. So maybe it's more like, hey, the stock is down. We need to do way better than this to even justify going higher. That's what happens with hype stocks and any sort of stock. Momentum will shift greatly. Alibaba, 310 just 6 months ago. Now it's 180. Why? Their numbers are better. Why is it down from 310 to 180? Mood shifts. What your job as an investor is to do is to learn how to sit there and remove all the noise and say, what is actually going on here? On this company right here, Corsair, if you believe that they're going to keep shares the same, grow 10% a year of revenue, have an 8% profit margin, 8% free cash flow, and sell for 15 times multiple, you can make 12.5% buying it today at this price. These are not crazy assumptions. The question is, are they likely to happen? That's what you need to ask yourself. But based on this, it might not be a terrible company to own.
Most of what were you going to say over there?
This goes back to that video that you sent when Amazon went from, what was it, close to $100 to $6, Paul?
What was that?
When Amazon, what were
they?
Oh
yeah, when Amazon in 2001, 2000 to 2002 went from $113 a share down to $6.
And Jeff Bezos did a video after, and they said, what were you thinking during that? And he said, well, we just kept seeing the stock price falling, but everything on the internal side, it was just, Amazon was growing and growing and growing. So stock price doesn't always reflect company. That's just what it is. And this is a perfect example of that. Maybe stock price here doesn't reflect company. And eventually it will. It will.
Over the short run, the stock is a voting machine.
Yes,
Over a long run, it's a weighing machine.
And also remember, when you get companies like this that came on, this was the next big thing. You saw it on the cover of everywhere. Everybody was in this. That's just a very big influx of volume and people just going into that stock. Eventually, the hype dies out and people just move out of it and it just becomes kind of boring. And if there's not a lot of volume and they're pushing it up and people are ignoring it, that's what's going to happen to it. Eventually, if the company fundamentals stay where they are, the company will progress in stock price.
That is our take on Corsair. We appreciate you guys watching, as always, and our dear patrons, you know we love you. Shall we get into our next stock?
Yep. I see a couple of donations came in.
Yep. Our donations today are going toward the Innocence Project to help people who've been wrongfully accused. And I've had half a beer, so I'm going to fumble through the rest of the show here. Thresh is asking for the company with the ticker symbol ERIC. I have no clue what this is, Paul. Do you?
Ericsson?
ERIC. Yes, Ericsson. Let's see.
Telecommunications equipment sector.
It's them.
Okay. Ericsson is a leading supplier of telecommunications equipment. The company's three major operating segments are networks, digital services, and managed services. They sell hardware, software, yada, yada, yada. Let's take a look at Ericsson. Thank you for the donation, Thresh, toward the Innocence Project. Paul, let's get after it. What is the market cap?
Wait a second. Stay away from me right now.
Oh, sorry about that.
I want to surprise everybody with something.
Okay. So, Mo, I love you. I'm going to fill some time with just professing my love for you and that Bid and Ask Nation, the videos you make on a daily basis, helping those people. If you are interested in trading resonates with you, as I fill time here, you can join the Bid and Ask, and Mo will keep you updated on the buys and sells, which he does for me, because ain't nobody got time to follow along all these confusing charts. But with my dear Mo, he can fondle my thumbs up and keep me in the loop with the stocks. Paul, what do you got?
Look at this chart.
Wow, exploding. This is a buy, Paul.
Well, you know what the funny part is? Look at the date.
Okay, 2000. Okay.
2000. It hit $100 a share.
It's going up. Uh-oh, what do you got for me, Paul? Oh, no.
So guys, another example of a company. If I told you right here.
Well, we know what they would. Yeah, we know what they would tell you, Paul. They say it in all of our videos, how stupid you are. You don't get growth.
The company's at $11 a share. It hit $100 and some a share up here. So if I told you when you bought this company back in 2000 for $130 a share, that 21 years later, it'd be selling for $11 a share. You'd have said, Paul, you are crazy. You're an idiot. You're dumb. Okay, let's go look at the company now.
Oh, boy.
$37 billion market cap, PE of 16.5, check mark there, profit margin of 8.5% X. Healthy gross profit. Now, my first question is, it's probably doing a lot of business things. Is this profit margin low because last year there wasn't a lot of business spending on technology like that? I don't know. Maybe, because this is a good, healthy gross margin. Look at this dividend yield. Wait, what is going on here? Uh-oh, possible dividend trap. Is this correct? Can somebody verify this dividend for me?
You want to pull up on Y charts real quick?
Yeah, what is the company? Ericsson?
ERIC. There you go.
Ericsson is huge in this 5G area.
Nope, that dividend's not correct.
Nonsense.
Buggy bug.
Might be.
5G is such a fallacy.
Oh, wait a second.
What's one right there, Paul? Hold on a minute now. The show's come to a grinding halt, and I'll fill it with my smooth radio voice. As we all know, we love you. The dear patrons, I can't thank you enough for your support. The software.
Yeah, I'm seeing a 2% dividend yield, so we got to report that bug right there. Tim, do you mind doing that?
Yes, I can do it.
Go ahead, Paul. We'll avoid the dividend at the moment, 2%. But keep going.
Income statement. 24.59 billion to 27 billion in revenue, okay? So that is a check mark there. Net income, negative 1.5 billion to 2.3 billion. So check mark there. But one thing I want you guys to note here, look at the inconsistent profit. 2.3, 325 million, 24 million, lost 2.9, lost 1.5, made 1.6. It's a little inconsistent for my likings. When there's inconsistent revenue, when there's inconsistent profit, please make sure you look over longer periods of time. All right?
Pillar number, I don't know. Go ahead.
Shares outstanding, 3.28 billion, 3.33. That's an X right there. So shares are slightly increasing, not by much, but they are slightly increasing. Balance sheet, cash on hand and cash equivalents, 18.6 billion. Total current liabilities, 14.45, check mark there. Cash flow, 4 quarters. All right. So at least they have more consistent cash flow. So that tells me that in the years they had lower profit, it was probably write-offs for other things because they do make acquisitions, guys. If you look over here, they make a lot of acquisitions. And with those acquisitions, there are write-offs at times. So 583 to 2.64, check mark, which average of 1.23 times 20 equals $24.6 billion. What was the market cap?
37 billion.
So it's an X right there. So even though now, granted, last year was 2.6. So you have to ask yourself, this is the second highest year of free cash flow in the last 10 years. Why did they have such a big free cash flow year last year?
So it's actually the opposite of what we were thinking.
Yeah, so why did they have that? There's a disconnect here between profit and cash flow. If you believe last year's free cash flow is the norm, maybe it's not as overpriced as we think, because 37 billion divided by 2.6 is, what is that, 15? Not even, 14? Okay, that's not bad. 14 times free cash flow for the last year, if you think that free cash flow will grow from here. Correct? That's the big thing. So here are the 8 pillars. We have an X on profit margin. Shares outstanding have increased slightly, and price to free cash flow is a little high currently, okay? But the PE is a little misleading because of some fluke thing that happened last year, who knows?
Mo, are people trading Ericsson on your end in the bid and ask?
I don't like trading this stock. I've done it before. I just don't like doing it. But if you want to, you do have a gap to fill from way back here in July of 2019 that it looks like it's coming down and about to fill. But you also have this one here. So eventually, I think, to me, this is a stock that just bounces between $14 and $10, and that's just what it does. So it's something that you can do. I think there's much better options out there. The good thing is you might be able to get away with day trading this because it's one of those ones that just fluctuates on 5G news every single, I don't know, week, month, whatever good 5G news comes out. So this is one of those. The 5G thing, though, I'm not buying it.
If you are new to our channel, I see some new names in there, and we appreciate you guys watching. If you've ever never joined a Patreon, you can look at ours down below. We give you the most for your money. I would have to say in any Patreon page out there, Paul. I mean, we give you access to this beautiful software you see behind Paul, stock analyzer tool, real estate calculator is coming, retirement calculator. Paul is changing people's lives and their mindset about saving their money and growing their investments. So click the link below to join the Patreon. They will double charge you, people. They will double charge you. If you join our Patreon today, they will charge you in a few days on the first of the month. We will refund one of those payments if you contact help at Everything Money. So do not let the Patreon malarkey hold you back. We will help you and to keep you as one of our patrons. Paul, go ahead with the stock analyzer tool. What you got over there for Ericsson?
All right, so, Ericsson's not a big grower, but maybe a shower. Is that what they say?
That's what you are.
Yeah. I put in all my assumptions here, 0, 1, 2% revenue growth, because I look at the last 5 and 10 years, and I'm like, okay, that's about where it's going to be maybe. Share change, all my assumptions here, not pretty. I have it between $4 and $13. So it's on the high end of the most aggressive areas. I assume the PE of 18, price of free cash flow of 18. A margin, free cash flow and profit margin that we haven't seen in the last 10 years. So I don't know if that's really reasonable. So I'm right now sitting there saying, does it seem massively overpriced? No. But I'm not really gung-ho about it. I'm passing on it because it seems like maybe it's selling for what it's worth, which is fine, but I'm not in this to buy something for what it's worth. I want to buy it for less than it's worth.
My son Gio, my 11-year-old Gio, is in the chat. Gio, Uncle Paul we talked a lot about Baba. You have 2 shares. Gio has 2 shares of Baba, and he should be excited because Uncle Paul's in love with it, along with Manesh Pabrai, my dear friend Gio. Paul, other people are asking, so that is our take on Ericsson. We will get to our next stock here in a moment. Victor, just to clarify, when is the best time to join Patreon and not pay? Folks, if again, you can join today, they will charge you, and then they'll charge you in a few days on the first. We will refund one of those payments. Just simply email us, and we give you your first payment back in the last 7 days of the month. We've always had this up, and soon we will be moving off of Patreon and giving you an exclusive entrance into our everythingmoney.com website. So, you will be double charged, but go ahead and join today. If you wait, Mo, the Bidnass Nation is going up by a few dollars.
It's going up to 69.
If you wait to the 1st, both of them go up $1 on the 1st.
Yeah, but it's going up 76 this time.
Yep.
Why?
You already talked about this.
Yes, Paul. We're matching our lowest level and our big
that one?
Yep.
So guys, here's the deal. Even on the middle tier, the $25 tier, it's going to 26 in the 1st. So you have to decide, do I want it now where I get it for free for the next 3 or 4 days once I get reimbursed to save $1 a month the rest of my life? That's the question you have to ask yourself. Are you up for saving money? If the answer is no, wait till the 1st. If you want to save money, sign up now. You'll be charged. When they charge you again on the 1st, email help@everythingmoney, and we'll reimburse you the first charge. Simple as that.
All right, that's our take on Ericsson. We have another donation. Donations today are going to the Innocence Project, which Paul is a huge fan of. And so the money you're giving us will directly go to them. The next stock is coming from Gary, and he wants to look at Union Pacific. Paul, this is UNP.
Trains.
Union Pacific. I know you played with trains as a young lad.
I ran train on... Forget it.
Yeah, and so here you are with Union Pacific Corp. It's in Omaha, Nebraska. We know what happens in Nebraska, Omaha, Paul.
I'm going to Omaha in September for a wedding.
Oh, are you? It's the largest public railroad in North America. 30,000 miles of track in the western 2/3 of the U.S. Yada, yada, yada. Let's look at Union Pacific Corp and the beautiful everything.
$143 billion market cap, PE of 24. That's an X. Trains tend to have really high margin, 28.6 the bottom line, check mark. They do pay a dividend of 1.8%. That pays out $2.6 billion. And last year they had $5.7 billion in free cash flow. So they have plenty of money, plenty of free cash flow to pay that dividend. It doesn't seem like it's going to be much concern. I will say this about trains. I don't want you to time the market with this, but if a recession hits or there's a slowdown, trains tend to get hurt. They can be used as a way to actually see what's going on as a leading indicator if their shipments have been slowed down. But we've also seen a big increase lately in costs associated with transporting things. What is Seth giggling about?
Oh, we have some very dear followers and patrons, and they said, Paul, Cash says you should be spending your money on filling those holes in the wall behind Mo.
It was a drive-by.
But just a random.
It's all the haters.
Paul, I think just before last Christmas, you were in that corner with the board on the wall. The lighting was hideous. It was just you and I talking to ourselves in this room. And sure enough, we've 60x'd
we'll be fine. If you guys want to just have us support the software, buy the software, we'll be able to fill in those holes. It'll be really appreciated. I would love that.
It's true, Paul.
Yeah, because my dad still pays my cell phone bill, so I need to.
Let's get back to Union Pacific.
All right,
we're definitely off the rails, Paul.
I get it, off the rails.
Paul, are you wearing a RM Bubba white?
I'm not. This is not an RM. It's a Hublot, but it's
Mo. Your watch
1/10 the price.
Show the camera that watch. It's some sort of navy number. What is it? This is a fossil, Hublot, I assume.
Yeah, it's a fossil. No, it's a Hublot. Not Big Bang. I don't know what it's called.
It's probably a piece of garbage.
All right, Paul, let's keep going. Know what it's called.
Operating revenue
Something
is only
down,
Paul.
It's down a little bit. So it's an X.
Oh boy.
Slightly down. Net income.
Pillar number 4.
It's a check, 4.51 to 5.88. Check, please. That's a chickity check. Yep. Okay. Shares outstanding. Holy cow, 804 down to 658. Massive check, guys. They are buying back shares like a mofo. It was 947 just 10 years ago.
Wow. Please stay on track, Dark Knight.
Is Nate going to throw up because he's too drunk? Okay, gotcha.
Breaking the seal.
Yep, he's gone. He's gone. It's Nate's. If you're joining us late, it's Nate the Great's birthday. Our intern, he's 21. We got him two drinks at lunch, and now he's frothing around, falling apart at the seams. Let's get back on track, Paul, with the trains. And Union Pacific, what are we doing? Shares outstanding. How about
Total current assets,
Yeah, current assets.
3.7 billion. Total current liabilities, 4.87. So that's an X.
Uh-oh.
Now, one of the things to do is when you see that is go to other companies in the industry, go to this company's past, see if that's a common occurrence. It could very well just be the way they do business, because I think it's about a third of the companies on the S&P that I looked at. The shares outstanding, the current assets do not exceed current liabilities, and that could just be the way they operate their business. So cash flow. Free cash flow. Remember, guys, as part of the software, 80 cents a day, I add this line to make it easy for you. 3.61 to 5.69, that's a check with an average of 4.8 times 20 is 96 billion, and that's an X because it's currently selling for $140 billion.
Yep, 143. How do you remember all this stuff? I can't even. Okay, keep going.
Well, I happen to remember that because I was like, damn, that's a lot for...
Train.
So here's the 8 pillars, guys. As you can tell, Tim's calling you.
You talking to me? Oh, it's better. It's better for the show. So, yeah.
Do you want me to go over here?
Just pull your thing back a little bit. Perfect. Yeah. So,
So we're going to put a stock analyzer tool after Mo does this. One thing I want to mention, I always do 7-year analysis on stock analyzer tool when it comes to a company that's more stable, like consistent. A company like we just did a video today for Southwest Airlines, and I did it on a 3-year analysis saying, okay, when it gets back to normal, what's it going to look like? What's it going to be worth? So that's why I did a 3-year analysis. So Mo, go ahead.
So let's look at it from long.
I can't imagine there's any volume in this, Mo, with this.
Yeah, I mean, it's something. But right now, I mean, you can see how much it just moves all over the place. That's probably because of lack of volume. But right now, it's in kind of a downtrend. So I don't know if you want to do something long term. But let's take a look at the daily chart just so you can see that since back here in January, you can see that the stock price has really hugged the 100-day moving average and the 50. And so it's just kind of just stayed right here, right along that 100-day moving average. So unless you get some kind of influx of a lot of green volume bars multiple days in a row to break it out, I think you're just going to keep hugging that 100-day moving average. You're not going to get any movement one way or the other. You're just going to stay on the rails.
So
Mo, you sly fox, you. Paul, the stock analyzer tool, what's going on over there?
So guys, remember, we are making assumptions based on what we see the company doing. This is a large company, a lot of revenue. So and railroads are not exactly an easy thing to just go, oh, let's just add more railroads. So I don't think the growth is going to be huge. The last 10 years, they had the same revenue as they had today. So no revenue growth. So I went and made assumptions of a 0.5% drop per year, 0.5% growth, 1.5% high. And I think the 1.5 probably isn't reasonable. Share change, buyback 2%, buyback 3%, buyback 4%, profit margin, 25, 27, 29. Guys, all the way down. These are pretty standard assumptions for me on the PE, price of free cash flow, and returns. Analyze button, overpriced. The company is currently at 218, and the highest level is 178, the lowest is 60. I'm not touching this thing. I am not touching it. I don't think any of these assumptions above were reasonable in the sense of, like, even the high assumptions, I'm like, that's going to be hard for this company, the company to get that. Is it possible? Sure. Is it probable? No. So I think at these prices right now, you're probably going to get yourself maybe a 6 or 7% return a year for the next 10 years on the high side. So I don't like it. I don't like it at this price.
Yeah, a little overvalued, wouldn't you think?
Yes, definitely overvalued.
Paul, would you like to give our patrons some idea when we can switch them off of Patreon and onto Everything Money?
During the month of August, before September 1st, we will start the transition. The benefit to you guys is we don't need to charge sales tax immediately. Right now, Patreon charges sales tax, and all of our foreign people, we won't be charging sales tax. In the US, the sales tax rules, even if a state charges sales tax for software, it's only after we hit a certain threshold of revenue in that state. So worst case, you're getting a few free months of sales tax. Best case, you're never getting sales tax ever again. So everybody's going to save money when converting over to everythingmoney.com.
And you're saying prior to September 1st, this will occur?
Correct, Tim? Yep, prior to September 1st.
Now, knowing you, Uncle Paul, you'll beat that by 6 weeks, and we'll have it like right now. So,
Beaker, for 3 cents a day, you could patch your walls. That is true, Beaker. That is true.
That is true. We should get on that. All right, Paul. That is Union Pacific. Gary, I hope you got everything. I hope all your wildest dreams come true.
Guys, we have 700. We had at one point 840 people watching. We have 164 likes. Come on, what is going on here?
That is true. Yes.
By the way, we'll still allow people to sign up on Patreon. If you still want to sign up on Patreon, you can, but there's no reason to. You're just gonna be paying more money and being double charged. It doesn't make any sense. Go sign up on Everything Money when we make it available and do that. It'll be awesome.
Aaron's asking, he's an $8 OG. How do we convert the new payment? You'll stay in your original tier, right, Paul?
You stay all in your tier. You're not going to go up. At some point in the next year, January 1st, we're going to do an increase in the charge for costs. Like $8 will probably become $8.50, something like that to increase in cost. That's it. You're still staying in your $8 tier, though. You're just going to go up minor 3 to 5% a year based on our costs, etc.
Okay.
Hey, actually, I did listen to one of his videos.
David?
Spicer, you sound a lot more normal on a video than you do when you're texting.
Yes.
It's just incredible here. I'm like, this is Spicer? I was like, Jesus,
I know.
man.
I thought the same thing. He has a facade of seriousness and joking in his comments. And then you get on his channel, and he's very serious about his dividends and long-term investing.
Yeah.
So follow Longshot's channel as well. And as always, we love to promote some of the people we look up to. Sven Carlin, Jimmy from Learn to Invest, Manish Pabrai, some folks we've been really into of late, and definitely follow them along for their great ideas. What are you guys doing Canadian stocks?
Make a request, pay the $50, make a request on a Canadian stock, and we'll do it.
Oh, we have Canadian stocks on the software right now, Paul?
We have had Canadian stocks on the software.
Sorry about that. Great. I don't look into them that often, so.
We've only mentioned it in the last 3 videos.
Well, I'm new to the channel, like a lot of people.
By the way, we're in free lunch territory at Crossroads Group right now.
The market's bad?
Yeah, down 1%. I got to do something where we talked about this before. Like, when the S&P goes below 2,000, I think like every patron should get like a $20 gift card to Chipotle or something like that.
Everyone?
Every single active patron at the time will get a $20 gift card to Chipotle.
Okay, that'd be like $80,000.
Yeah, it'd be up. What was that?
It'd be like $80,000.
Oh no, by then it'll probably be like $200,000.
Oh, okay. Well, you want to mark it down?
Well, by then though, I would have made how much money on my S&P short.
I see.
Yeah, and that's not official, so don't hold me to that. All right, what's next?
Do we know anything about?
We just got 100 more likes just by me saying that right there.
That's nice.
We're at 262. Isn't that incredible?
There's nothing next at the moment, so we can chit chat. We have 15 more minutes in the live stream.
David, it's not true. Stocks out of the U.S. They provide data differently than the U.S. ones. They don't provide every quarter all the time. So when you're looking at data, you should look at the annual data, not the 4 quarters data. It's a great question to ask, but that is something to look at when you're looking at data from foreign companies.
Oh, Awkward does want a stock here. The stock is CIA. This is, let's see, what do you have?
Champion Iron Limited.
Well, I have Citizens as well as ticker symbol. You got the right one, Paul? Scroll down a bit and read the description and make sure we're on the same page here. Is this it? Yes. Okay.
Citizens?
Champion Iron Limited. I have Citizens in front of on my chart here, but let's see what this is.
This what did he want?
He wanted I assume he wanted the Canadian company because Citizens is an insurance holding company in the U.S. So let's go back to yours, Paul.
Plus the PE is low, so I imagine it's probably a big plus for him.
This is Champion Iron Limited. It's a development of iron ore properties in Quebec, Canada. Let's get.
Mo has an ex-girlfriend who lives in Quebec.
You do, Mo?
Yeah.
Okay. That has nothing to do with this, Paul. Let's keep going. Let's go ahead and look at this. Let's look at.
You have nothing to do with our channel, so. Guys, iron ore, remember, it depends a lot on the iron prices. So commodity-driven businesses will be really driven based on that underlying commodities price fluctuations in the market. So that's my first caveat. So when you look at the revenue and profit jumping, it's especially important to look at long-term trends and see if they're in a cyclical high or low based on history. So $2.6 billion market cap, 7 PE, check mark with a 36% profit margin, 30 check mark there, no dividend, really high return on assets, and a pretty decent return on invested capital. And every single price is above their corresponding moving average. The stock is currently at $5.33. Income statement. Oh boy, what is going on here? Let's go to annual. What happened here? They did $1 billion in revenue, net income of $370 million last year. Okay, shares outstanding up a lot though, 380 million up to 478 million. So we have revenue and profit growth.
Awkward saying this is one of the companies that came up when they tried to do a little book stocks for Canadian markets.
Oh, who is they?
Interest. The person who queued up this request, Paul.
Gotcha.
Yep.
Current assets, 643 million. Current liabilities, 234. And even better, total liabilities of 513. So they have enough cash on hand to pay off all their debts. And the other thing one thing I look at when it comes to commodity businesses, I'm going to go observe their inventory costs on the balance sheet. What I like here is their inventory is only 53 million out of the 643. Because if this was a really high number and iron ore, for example, is really high, I'd sit there and say, hey, you got to mark this down. But it's not. It's a very low number based on their total current assets. Even though a true value investor would still mark down inventory, I like the fact that it's less than 8% of their total current assets, which is awesome. So far, I love that. That's a check. Cash flow. So I think it's an interesting thing. It has cash flow going back all these years. We might just have a data issue there. So negative 17 million to a positive 355. Check mark there. Guys, look at this inconsistent cash flow. Negative 9, negative 8, negative 4, negative 17, negative 182, 83, 124, 355. No idea why. So this is kind of a hard one. The average is 72 times 20 is 1.4 billion. And the company is currently 2.6 billion.
Yeah.
So that's an X. It's a hard thing to analyze because of the fact that there's not much history on it there. Stock analyzer tool, do you want to do that? I don't know. It's kind of a tough one. Oh, we don't even have debt. That's why. It only went public recently. Mm-hmm. Wow, look at this, $1 a share. It was under $1 a share just 2 years ago, 2.5 years ago. Isn't that incredible? That's right. So if you believe this is the start of a huge company and they're going to grow from here, this is I think a buy at this price. If you think this is going to, but again, iron ore prices. Let's go look at the price of iron, the historical price of iron. Historical price of iron. That's going back to 2007. Here's St. Louis Fed.
That's the year I graduated.
6-story.
Barely.
So look at this. Iron's at all-time highs. That would cause me to be a little apprehensive about going forward on a company like this. When you have, unless there's a secular shift as to why this price will be stable for a long time. I don't know if it will, but look at these big fluctuations. This was 180 maybe, and it hit a low of 40. If this happens again, this company's going to hurt. That's why I don't like commodity businesses as much. This is from the St. Louis Fed, the global price of iron ore monthly. I look at this saying, this is at a global, I wish it was like here when it was showing these profits. I'd be like, okay, things are probably going to go better from here. So I'm just moving on.
Right off the bat, Cash said, look into Worthington Industries, ticker symbol WOR, and that he thinks this is a better company overall for iron. So.
All right, check it out, guys.
Okay. What else? People were saying some things, Paul. I wanted to get your thoughts on, and of course I lost it, but
that was a good one.
Okay. We're doing great.
So Ryan just said, I'll join you off Patreon. Ryan, you're just going to pay more then, because September 1st, the price will be $2 higher per month. If you join now, you're going to get your money back in 1 year. How many things can you invest in today where you get your money back in 1 year? That's 100% return on your money. Join today, Ryan. No brainer. You get it free for the next 4 days. You get it at $25 locked in, and it'll be 26 on August 1st. It'll be 27 on September 1st. Come on, bro. Come at me, dog.
Julian's asking for a Canadian bank. Julian, we typically do not do banks.
This is a great question by Nicholas Struder.
But Julian, if you'd like to, thank you for the donation to the Innocence Project. If you'd like to queue up a different stock, we can certainly look at it.
So great question by Nicholas. Why do markets go down? Don't companies usually improve and get better? I don't get it. Keep in mind, I've never experienced a crash. Great question, Nicholas. Markets go down because of a change in sentiment. Usually it's not driven. In the short run, stocks are a voting machine. In the long run, it's a weighing machine. Over long periods of time, a stock price is going to go where the company is. If the company fundamentals get better, it'll get better, but all based on certain metrics. If it's massively overpriced, the stock will probably come down to a more normal level. Stocks can go down and up based on emotion and euphoria. Let me show you guys this image that was posted today on Jimmy, Investors Grow. It's his Instagram account, Jimmy
Jimmy from Learn to Invest.
Learn to Invest. Guys, this is the cycle. This is market psychology. Disbelief. No way this rally would succeed. Maybe it's real after all. Oh, wow, this is real. Let's go all in. We can still go up. Time to YOLO. I'm a genius and a millionaire. This is being said by a lot of kids these days, right? Then we can still go up. We're just gathering steam for the next rally. Why am I getting margin calls? We can still recover from this. Panic, anger. Arg, why is everyone selling? I rushed out. Depression. This is a sucker's rally. This happens every time in bubbles. Somebody asked me today, where do you think we are? Somewhere here. Now, I thought that same thing 3 or 4 years ago. I was clearly wrong. We very well could be right here. I don't know, but we're definitely not here. Because if we were here, stocks would be a lot lower. This is where I think we're here right now. Because we see this choppiness, hitting new highs, coming back down. When you see euphoria of kids at golf courses telling me I'm wrong on Palantir and Tesla. When you have morons who are overseas telling you that Palantir is the best stock ever and telling me they don't even have money because daddy gave me money. You have bubbles. This is just the way it's going. I don't know what to tell you. I just think that's where we stand right now.
Julian, we're waiting on maybe another stock out of you. We appreciate the donation.
Yeah, S&P below 2,000. Oh my God. You know, listen, I look at history and I look at the S&P. Let me show this one all the time. So let's go to Guru Focus, Buffett Indicator. This is why I think the S&P will go below 2,000. It's currently at 206% of stock market GDP. You take the stock market value divided by US GDP, it's at 206%. It should be around 100%. And stocks don't go to where they're worth. They always go below or above. When you have stocks going like this is the stock market over time, right? This is where stocks actually go. They don't ever they're only at the lines of a short period of time. They're usually over or undervalued. So if I think the stock market's worth 2,000 in the S&P right now, which I don't think that, but let's say it is, then we got to go below that. Or values could go to 2,400 and we go to 2,000 because that's below the market. I don't know where it's going to go, but all I think is it's going to go way lower than here. Way lower. And that stock market GDP ratio is one of the highest correlated metrics related to stock market returns, over 90% correlation.
Yep, just to clarify, folks, if you join Patreon today, you will get charged today, and you will get charged on August 1st. If you email help@everythingmoney, we will refund one of those payments so we don't lose you. But yes, you will get double charged, and we can refund one of them. Paul, what else do you think here? We have 5 minutes left. Maybe open up the general Q&A.
Yeah, let's get some general questions. The software is going great. The app is going great. We're going to continue making progress on them. We're growing every single month. We had over 1,000 new subscribers to our software this month. Guys, it was an incredible month. What are you shaking your head for, Tim?
Go look at the chat. Yeah. Scroll up this page.
Paul doesn't get it like always. Is that Mason?
Scroll up. It's an account name. It's an account
Oh, Paul Shorts. I saw that.
Wow,
Who is
look
that?
at that? That's beautiful. Look at those shorts and little tights.
Kay,
Yeah.
I don't know how to value a bank. Valuing a bank is very difficult. What are the risks of puts? Great question, Derek. When I'm selling a put, if I have a stock that's selling for 100 right now, and I sell a put for 3 months from now for 80, the risk is I analyzed wrong, it goes to 60, and it's only worth 60. And I go, oh shoot, I'm forced to buy it at 80. That's the risk. You might sit there and say, well, the risk also, even if it's worth 80 and you're right, you're still buying it at 80 and worth 60. But if you're going to buy it at 80 anyhow, you're going to lose that $20 a share anyhow. So I don't look at that as a risk. What's the additional risk? The additional risk is in the time frame between the time you sold the put and the time the put expires, that the information changed to the worse. And you go, oh shoot, I don't even want the stock at 80 bucks. That's the real risk of selling a put. That's the risk I worry about when you go out further and further in the future is, oh crap, I didn't value this correctly. It's worth way less than I thought. That's the risk.
Someone gave us a donation, and then I can't see the follow-up. They want a different one, or should we pick them up next time? But Paul, what about the Caribbean house in Turks and Caicos? How's an update on that? How's it going?
Turks and Caicos house is going great. I'm making selections now. I'm working with furniture people now. Our goal is to have it ready by next summer, and we're rolling on it. Andrew, Mary, and I meet every week on Monday at 10 a.m. to discuss next progress.
Patrons, we have an exclusive video coming out for you. A little preview of Paul's new home, a little tour.
Yeah, I don't like this. We have to keep doing. Oh yeah, it's for patrons only though.
Yeah, patrons.
Okay,
yeah. We did the fireside chat last Friday, and I did a little video of Paul's new house. We'll show you. And there's a tendency to say, "Wow, Paul, this beautiful house." Just to be clear, folks, he bought the house before we even had patrons. So don't think it's just. I want to make that very clear. You've been.
What's that?
Well, Paul, how would I say this? I grew up in a very a liberal home where we were supposed to dislike rich people for being very selfish and greedy. So when we have a very thriving Patreon and then we show off a beautiful new estate that you bought, I want to make very clear that you bought this house prior to having Patreon. I mean,
By the way, even if I didn't, even if I bought with Patreon money, then cancel your Patreon. It doesn't bother me. Like, if you really hate the fact that I'm gonna make money off it, then cancel. Bill Gates made hundreds of billions of dollars off of you buying Microsoft. Do you stop using Microsoft Office because of that?
You know, I say that because last week, like 2 billionaires went to space, and besides a lot of the donation, the money they give away, everyone just
forget about the money they give away. Even if they don't give away $1, it is their money to do what they want with it. Just like the Wright brothers when they created the airplane, there were probably people they could have helped without that. But how much did the airplane change the world, saving lives in the future by changing the world, by creating cars, airplanes, everything out there? Don't stop. I hate when I read on the internet, like when Bernie Sanders says, oh, we gotta start taxing billionaires, the fact they're going to space. Who knows what that opens up to? All I know is as we've advanced more in society with technology, it has saved lives. Overall, lives become better, wealthier. The world becomes wealthier because technology. That's it. The world is better and wealthier because of technology. Africa will be a thriving continent at some point because it's probably going to get better and better. It is the next frontier in terms of work and labor. I just don't understand why people hate on that.
Paul, Julian picked a stock. Let me read it off.
We don't have that stock, I guarantee.
Alimentation. I don't even know what that is. Sorry, guys. Maybe we do, Paul. Let me check. I see it running there. Let's see what we got here, Paul. I don't even know. I'm not even going to try to pronounce this thing.
Should I record my Bumble swiping? I wish I could, but the problem is you can't get approval from all the women on there. Matt Jones talks about everything money Bumble. That'd be great.
Yeah, Julian, we might have to owe you here because I don't even know what that is. My apologies. I do love you nonetheless. They're saying, oh, it's a Toronto exchange. Do we do exchanges, Paul? Jillian's really trying here.
Okay, so tell me what the ticker is. What's the name of the company? What was that? Oh, it's TSX. It's the trains.
No, I'm sorry. The Toronto Stock Exchange.
What's the ticker?
ATDB. It's /B.
Yes,
there it is. We have it.
Praise the Lord Jesus Christ, my Savior.
Okay, here we go. We're getting religious.
Oh, look at that.
What is it, baby?
Okay, metrics. Let's go do it, and then we'll probably be close to done. $43 billion market cap, 15.8 PE. That's a check mark. Profit margin of 5.9%. That's an X. We don't have any descriptions for the Canadian companies. They're probably coming soon. Dividend.
You can't get some of them.
Probably. We can't get some of the descriptions. 0.5% dividend yield, pays out $200 million. Last year they had $2.9 billion in free cash flow. That dividend appears safe. All the prices are above their moving day averages. That's pretty awesome. Income statement. $38 billion to $45 billion. That's a check mark, but keep in mind, they are down. What does this company do?
Someone let us know. Canadians maybe help us out a bit. So.
Net income, $1.2 billion to $2.7 billion, check mark. So interestingly enough, they have record profits, even though the revenue is actually down in the last 3 years. So keep that in mind. Shares outstanding, check mark there, 1.14 down to 1.11. I think we're all checks so far, aren't we?
Someone's saying it's a convenience store with 14,000 stores all over the world. Okay, they're convenience stores. Okay, so we're getting a...
It's Circle K.
It's Circle K?
It looks like it.
Okay.
Actually, the Circle K is the most expensive gas in Richfield. I never go to that Circle K.
Keep going, Paul.
All right, $7.1 billion in current assets. Current liabilities, 5.95, check mark there. And then for the big mama jamma.
Free cash flow growth.
Free cash flow growth. 931 to 2.86, check mark, with $1.8 billion average times 20 is $36 billion. What was the market cap again?
43 billion.
That's an X there.
It's a little overpriced.
Little overpriced. They made some big acquisitions along the way too, if you look, and sold some assets too. So guys, the revenue is trending down over the last 3 years. I don't know why that is, but over the last 5 years, it's up. Let's go look at the 8 pillars here.
We need those same store sales, Paul.
We do. So let's look at a 7-year analysis while do they trade that?
Yeah, they do. We're going to use Yahoo Finance, but we could do it.
Let us know, baby.
All right, man, is this hitting all-time highs?
I think so, yes.
Yeah, it is. Okay, so let's zoom in a little bit. I mean, this goes without, I mean, your stochastic, double check that stochastic on your charts if you can get it on TradingView. But if this thing breaks out and makes another all-time high, man, this is looking pretty good. The volume is a little bit inconsistent. I don't like how much it waves up and down. Today's 532,000 trade, so I guess maybe it's different in Canadian markets. Maybe average volume, I shouldn't say, is supposed to be 1 million shares traded per day. Maybe they have less volume. I don't know. So make sure you pay attention to that too.
All right, that's our take. Thanks, Julian, for the donation to the Innocence Project. Thank you all for the wonderful show, Paul. When are we giving away one of your beautiful watches? That red one you want to give away? It's going to go to one of the patrons, wouldn't you assume?
No.
Okay.
Maybe, but I have to sit there and figure out what we're going to do. Let's do a stock analyzer tool for this company.
Oh, I thought we were done. Keep going, Paul.
So I made some assumptions here. 0% revenue growth to 5% because I didn't like the fact that revenue was based on acquisitions. Share change 0 to negative 2%. Profit margin 3 to 5%. Because over the last 10 years, it's been about 3. Free cash flow as a percentage of revenue 3 to 6. PE, analyze it. It's pretty expensive, guys. The best situation makes it a buy. I'm probably looking at it below $25 where it's tickling my feather. So when was the last time it was up? It was at $25.
Last April? Yeah.
Yeah.
The crash.
Last January. No, this January. It was at $29.
Okay.
Last January.
Paul, go ahead. Keep going. Sorry.
So yeah, last March, it was at $24. So it's been a while. But again, math, investments are just math. It's a free present value of all future cash flow and earnings. You have to sit there and say, okay, what's the thing worth? And as a value investor, you want to buy the not the sure things, but the no-brainers. Like, okay, this makes sense. That's what we want to find.
Will we ever look into Indian stocks? There's so many
At some point in the future, I'm sure we will, but not right now.
Not at the moment.
Not right now.
Right, Tim?
I need you to do a clarification. I'm just messaging.
Go ahead. Go ahead, Tim.
So, for this month.
Oh, you can get on the mic there, Tim.
Okay. So, if you purchased a Patreon from the 25th.
If you purchase a Patreon from the 25th, keep going.
25th through the 31st of July, then we will refund you.
Okay.
One of.
Oh, not both.
Yeah, just one, but it has to be the 25th. If you purchased on the 22nd, the 20th, that's not the last 7 days of the month.
That's true.
So that's just an FYI. 25th through the 31st. And then the second thing is upgrading to Mo's tier. Paul, if you want to explain that, or actually Mo, you explain that.
What we're doing is...
It's not a free trial.
It's not a free trial. You upgrade. What you're doing is for the first 30 days, you are reserving your previous spot at your previous level on the level below. So if you were at the $25 level, you go to the $76 level, you have 30 days to try it out. If you don't like it within 30 days, it has to be within 30 days. You email and say you want back in, get the $25 level. If you wait 2 months, you got to go to the next, what the current price is for that level. It might be
you lose
27.
You
lose your spot in your level. You have to go back. You have to go to the level that's currently selling for.
So if you'd like to try the bid and ask, you go in Patreon, you pay the new bid and ask fee while maintaining your former fee. You try it for 30 days. It's on you to email us, help at everything money, if you want to go back to your original Patreon tier if you're not in love with the bid and ask. And after 30 days, you're stuck. You're not stuck, but you are in the bid and ask, and you do not have your old spot back. So if you're
you can go back, but you can't go to the previous spot. You have to go to the next spot.
That's right.
Now, Seth, as far as upgrading to the bid and ask, we don't get notified through Patreon. This is one thing that'll be amazing when you switch over to Everything Money. We'll be able to provide even better customer service. But when you switch over, you get double charged as well. So if you upgrade to Mo's tier today and you've been a patron, you'll get double charged again at the first of the month. Please email us about that one. Now, if you were just joining for the first time, the Minions tier or the bid and ask, we do automatically refund even if you don't email us because we're able to search that data.
Yeah, Tom's saying, if we paid on the 24th, it's unfair. Tom, at some point we have to make a line in the sand, which is why we're getting off Patreon. This is not us. This is Patreon. You can email them and complain to the 200,000 Patreon pages that are out there. They all hate it, and Patreon knows that. It's certainly, we're gifting you one payment back, where I assume very few other people are doing that. So
we know for a fact people aren't doing
absolutely.
that. So
why would you? I mean,
the other thing is that you got to look at it and say you're saving money still. You're still getting the lower price. And look at that as your benefit. You're still making 50% return on your money by saving the $1. All
right, that's
by signing up now.
Great show. Patrons, 2 p.m. on Thursday. You get another live stream from us, the three of us at Patreon. Top tier. The top tier is the bid and ask and above. You guys get a live stream with the usual live stream on 2 p.m. And that's our take on all this, Paul. Thank you for the great show. Happy birthday to Nate. Thank you for our subscribers all over the world. We definitely adore you, and our patrons, you know, I love you to death. We will be working on a new content for you coming out this year, exclusive content, merch. It's an exciting year for Everything Money, and we're happy to have you guys on board. All right, that's our take. See you guys. Thanks for watching the show.
Guys. See you Thursday.
And see you around. Yep, see you Thursday, guys. Love you.